Hello, everyone, and welcome to today's session. This is Ginny Jessica, and you're listening to Secure Insights, a series of conversation with industry experts, influencers, and leaders in the cybersecurity space. So, audience, our guest speaker for today's episode is an accomplished IT strategist and leader with experience in implementing complex IT solutions to improve overall business processes for organizations nationwide. With his ability to swiftly adapt and leverage new technologies quickly, he is the advisor of more than 15 companies and is the Chief Information Officer of Dana Foundation. Here to impart his knowledge on cyber insurance, please welcome Jim Rutt. Hi, Jim. Welcome to Secure Insights.
Well, thank you, Jeannie. It's a pleasure to be here.
Many of us are not familiar with cyber insurance. We would love to understand more about the topic from you. So, Jim, what do you have for us today?
There's quite a bit to say about cyber insurance. I think there's a lot of great discussions out there in the marketplace amongst our peers in leadership and technology and cybersecurity. Overall, I think everybody is aware of all the different cyber events or cyber breaches that have been reported out in the mainstream media. They become very commonplace. And I think as these things are increasing or by no means decreasing, there's a lot of concern about how to protect yourself in case you become victim to one of these events. And how are you going to ensure the continuation of your operations through an event, after an event? How do you return to normal should you be victimized by one of these events? So the topic or the availability of cyber insurance policies is obviously one area that you can look at in your overall risk management program. We typically look at other controls prior to that in an environment, like technical controls, compensating controls, mitigating controls, such as from the very basic network type of controls like firewalls, routers, et cetera, intrusion protection, et cetera. And these give way to other types of compensating controls like antivirus or anti-malware, and cloud protection if you happen to have a cloud tool or cloud security platform. Past that, you get to a point where you have some residual risk that you may want to cover in the event of a major event. So this is where you would start looking from risk mitigation to risk transference. So typically the number one area of risk transference is cyber insurance. And there's a number of items within these policies, and this is a big conversation about, as this market kind of evolves and morphs to adjust to the increase in these type of events, there's a lot of considerations to take. Beyond just trying to get a policy and trying to negotiate a favorable rate, you have to understand what truly a cyber insurance policy will cover, and will it truly be like the push button method, I like to say, to get your operations back to where they need to be and cover any other incidental events that might occur as part of a cyber event that that causes some kind of business interruption. Now, typically you have to figure out from a risk perspective, what is the acceptable amount to pay for some cyber insurance coverage in accordance with the risk that you're trying to protect. So that really means you need to have a good understanding of what assets that you're charged with protecting, understanding the value of those assets, the possibility that those assets could be compromised by any kind of event. The most well-known one, obviously, out in the mainstream media is a ransomware attack, where your data gets encrypted and you have no way to access that without either paying a ransom or finding some other way of recovery. But it goes way beyond just a technical recovery in your environment. I think a lot of folks don't understand the before and after of a technical recovery of such an event. Obviously there's a lot of communications that are needed in the event. It's very similar to any other kind of incident response that you would have in case of any kind of other technical breakdown. You need to understand how to perform forensics on such an event in order to facilitate reporting of these things to proper authorities and legal bodies and regulatory bodies, as well as understanding a recovery strategy, how much downtime is either acceptable or that you forecast you would have as a result of this, the necessary communications past that, any legal implications as a result of interruption of delivery of your product or service, as well as any reporting requirements in case that any kind of regulated data like personal or protected data is breached, and understanding how to what bodies to engage or what firms you can engage with the proceeds from some cyber insurance like that. The other area that's very interesting is an area called cyber extortion that most firms don't really think about. It's where your data is gained by some illicit method and can be held against you in return for some kind of a ransom. It may not necessarily be a ransomware attack. It may be just a traditional breach of your network or your technical infrastructure. That data is collected, and then that data is held against you as kind of blackmail or ransom, in return for a ransom. A lot of these policies do have clauses that will allow you to collect in case that you have to pay that out. Past that, there is a number of other areas about cyber insurance that I'm sure we can get through, Jeannie, and I'd love to take some questions because we can kind of go up and down the scale of this, but I'd love to hear some feedback from you or questions. Specifically, we kind of tailor the conversation from that perspective.
Sure, Jim. So I have a question for you. So, if an organization is planning on buying cyber insurance, then what would it cost out of pocket to pay for cyber attack damages?
So that's a very good question, and a little bit of a contrarian view to that standpoint, Jeannie, but I see premium rates for cyber going up dramatically. As a matter of fact, I would say just since calendar year 2021. And the reason for that is I think a lot of these companies that provide cyber insurance have found that the models or the actuarial triangles that they use to figure out what they can, what is appropriate to charge, they don't have as much history as they do some of their other protected lines like life, auto, health, etc. This is such a new and widely increasing area of risk for a lot of underwriters and even reinsurers that they can voice some of that risk off to. It's getting I think they came into this area thinking of a great opportunity at a low cost. Now, with the vast increase of these types of breaches, it's getting much more expensive. And I think a lot of these companies are becoming more restrictive in terms of the conditionals that they're placing on these policies. That being said, without a cyber insurance policy, there's some significant costs in case of, let's take, for instance, a ransomware attack. You would need, obviously, time, effort, and trained personnel to recover your network, your infrastructure, et cetera. You're talking about, in the case of even of a medium-sized company, that could run into the hundreds of thousands of dollars. Add to that the downtime during that recovery period, which could be whatever time period you divide into your annual revenue, can be a very material number, of course, very large. Plus, there's a number of other costs that a lot of folks don't really think about, especially with a ransomware attack that may impact regulated data. You will then need to do specific reporting both to the public and also to regulatory agencies. So you need proper public relations agent if you don't have one on staff to be able to craft the proper communications. That will cost tens of thousands of dollars, plus legal costs that you may not have on site as well, more tens of thousands. So without a cyber insurance policy, I would say a run-of-the-mill ransomware attack, from beginning to end, could easily upward cost, easily seven figures or more, $1 to $5 million for a medium-sized organization. So if you couple that with the cost of a cyber insurance policy that may mitigate at least most of those costs, right now in 2022, it's not a bad deal. Most of these policies will probably run within the 5 to 6 figure range. And although it may seem at the outset that the risk of experiencing one of these types of events might be low to medium, I see that increasing in the years to come. There's no end to these types of events happening, as we've all read.
Yes. You have rightly mentioned that we can't see cyber breaches decreasing. It's true that there has been no slowdown of cyber attacks as such. Then, Jim, what is preventing these companies from getting cyber insured?
Well, I think there's a couple. One could be the cost. It depends on the size of the organization, and if they've determined that the quoted premium from the whatever broker or agent that is sourcing these underwriters from is larger than could be reasonably paid for what they perceive as not so big of a risk, uh, there could be a reason not to engage in coverage there. The other area is due to the conditionals that a lot of these underwriters are placing on these policies, meaning they're requiring a lot of the policy for the companies that they're underwriting policies for. They're requiring a lot of additional controls in their environment, which may be too costly or too encumbering for these companies to adopt, such as maybe additional, and everybody should be doing this anyway, but some companies don't want to, like multi-factor authentication is a baseline conditional for underwriting, as well as having someone on site, maybe or maybe a full-time person that specializes in, say, privacy or some other management, which a company, if they're not large enough, may not have the budget to retain somebody on premise or with full time. So there's a couple of mitigating factors there, as well as the fact that there might be a misconception that, say, a traditional E&O or errors and omissions policy could cover some kind of computer or technical losses in the event of a breach, which, as I've described before, a lot of these coverages are not that complete when it comes to specific ransomware or other similar types of attacks.
So, are you saying that these are the misconceptions about cyber insurance that are preventing people from getting cyber insured?
Well, I would say a misconception that I've seen, and it may not be so much to prevent them from getting insured. It's a little bit disconcerting to think that companies that actually get a policy in cyber insurance think that that means that they won't have to engage boots on the ground, so to speak, when it comes to actually recovering from a cyber event. I think the perception is they can just make a claim in their cyber insurance policy and everything will be fixed without any kind of intervention by the affected party. It's without question, it'll never happen that way. I think, any types of these events, it's going to take a significant amount of time from leadership of that organization all the way down to the actual impact workers involved at every step of the way through recovery of an event, irregardless of the types of claims that are granted against these policies. So, from the opposite side, I think where you're aiming more towards is maybe not understanding why additional coverage vis-a-vis cyber insurance would be specifically aligned to, I would say, other objectives such as board level objectives. Maybe the board of directors doesn't feel that the additional coverage is necessary given the presence of subject matter experts on site. That could be a possibility as well. In any case, I think any kind of decision whether or not to engage and eventually get a policy needs to take into account all these different factors.
There are many companies out there who are doubtful if they should get cyber insurance or not. So, this question is from those companies. They want to know what types of cyber risks are insurable.
Yes, absolutely. So I think the basic ones I've covered. Uh, I would say recovery of or successful claims would include recovery costs, so technical recovery of data, um, negotiation. Some will cover partial or full recovery of ransoms paid in the event of a ransomware attack. Coverage also for downtime in the event and lost revenue to a certain percentage, maybe not 100%. It will also cover, and this is where I see applicability for most companies, because most of these companies don't have this specific subject matter expertise on full time, would be any kind of public relations costs, or hiring a PR firm to craft communications in response to such an attack. Legal costs in the case of any kind of legal actions against that company as a result of those events. Any kind of reporting requirements, obviously there are costs associated with that. Cyber extortion, I've talked about before. Any partial or full ransomware or ransoms paid in the event of a non-ransomware breach. And any liabilities incurred as a result of breaching privacy. If you're a regulated firm that has to report on any kind of privacy regulations like GDPR, like CCPA, or any of the other regionalized privacy regulations, these kinds of costs can be recouped as well.
Jim, if we talk about SME sector, small and medium sized enterprises, then by what different ways can they get cyber insurance?
So small or medium companies, and I think in some cases even large companies will go this route. Typically, they'll go through the broker that they use for some of their other corporate insurance levels, right? So risk management and risk transference, it's pretty well, it's like the lingua franca for most of these agencies. And what they'll typically do is then go out to the major underwriters in the market, given whatever baseline information those small or medium businesses have, from an environment perspective. And I think most small or medium businesses need to have a clear understanding of their network, their technical architecture, the perceived risk in terms of the data that they have. Is it regulated by a specific regulation like HIPAA or any of these, types of GLB or SOX, if they happen to be public, and have an understanding of the regulations that are there and what penalties could be experienced as a result of violating these through some kind of a cyber event. And while sharing that kind of data with a broker, they can just, again, go out to the different underwriters, and then given those variables, come up with a number of quotes, and then it's contingent upon the small or medium business to understand what policies, from a cost perspective, from a restrictive covenant or conditional perspective, which one would be the best. And typically the broker would be engaged as the middle party there.
Okay, so will cyber insurance be available to even individuals?
I've seen some offerings. I don't have a tremendous amount of experience there, because the risk there, I think it's not really one that a lot of underwriters are looking at right now. There are small regional offerings, as well as companies. I mean, it started essentially with credit risk, I would say, and like LifeLock and these types of things, because these are kind of important to individuals, especially ones that could suffer a big loss in those areas. It I think it's not something I really know about that much from a individual perspective. There certainly is a market there, and it's going to be interesting to see how that grows.
So, Jim, who are the biggest cyber insurance companies in the market right now?
So it's no surprise that most of the biggest cyber insurance companies are probably the largest underwriters of other lines of business. But the bigger ones, at least in the US, would be Chubb, AIG, Hartford, CNA. Those are the ones that typically come up in an agency request for quotes. Past that, you have reinsurers as well, that a lot of these insurers will offload risk. And I think Munich Re is probably one of the bigger ones out there. So obviously that will play into account what the premium rates will be and what coverages are available.
Thank you, Jim. We have more questions for you, but it's time to take a break. Listeners, there is a second part of this podcast which will go live on 28th February, where Jim will address more questions on cyber insurance. So don't forget to tune in to Secure Insights. We will meet again. But till then, goodbye and stay safe.